This paper coming on now is going to be presented by Dr. Juma, the Commissioner of Insurance, and Mr. Justin Mwando. To introduce the presenters, I will just do briefly that Mr. Dr. Musa Juma is the insurance regulator, and that will be enough for me to introduce him. But as for Justin Mwando, I would just say he's my classmate. So I have introduced them all. So I now call on the presenter to come over for presentation. Please, Dr. Juma and Justin Mwando. And this is the group, I'm not going to time them. You know what it means, eh?
Good afternoon. Mr. Commissioner, President of TIBA, and delegates. Now, my paper is on the future shape of the market. Now, this is a bit a difficult topic because to predict what will come in future is an uphill task. You have to be a prophet to do that. So you will excuse me if I don't give what you expect to be the future of the market. But I will just highlight the salient features, which I'm sure they've been touched in other papers. So you'll excuse me if I repeat some of the issues which have been discussed. And for that matter, because we were given the theme, and all the people were just swimming on that theme. So I might repeat some of the issues. To touch about the future, I mean, to speak about the future, of course, you have to look at the trend, the history of sort of, and maybe project or think what will happen in the future. So I will skip the trend aspect of the market of Tanzania. Of course, it has gone into different eras, which I will not touch them. I'll just go straight to the subject matter, that is the future market. Now, the future market, I've said that in my paper, that a lot of people have talked about technology development. And this is what I see will be the future of this market. In other words, we cannot go without change in technology. The technology is developing very fast, and as insurers and brokers or players in the market, we must leverage on this technology if we want to reach the masses. Now, citing the statistics from TCRA, you see, you find that the subscribers to mobile phone users, for example, there are so many, about 41% by the year by June 2018. And these use mobile phones, and these there are out of these 20 million are using mobile money services. Now you can see some people are talking about microinsurance right now. That if you want to reach these people at a very minimal cost, then you must leverage on this technology. We must use this technology which is there almost to about 3/4 of the Tanzanians. So by designing products which will be friendly to these people who can understand, because you are using technology, you have no contact with them. You have to design policies which are so friendly, understandable, easy, and you see, the administration of these policies should also be simple. If there are claims, for example, they must be paid as quickly as possible. No more, no use of these small prints which you insurers or we insurers are used to do, that you start to look at the scapegoat where to decline the policy. Pay it. Just design simple and understandable. Even if you tell the guy that this is not payable, then he can understand you. But I think let us leverage on technology. Again, I've said much about this, the use of these quick codes. You can see how now these M-Pesas and whatever, they are using on that. Everyone is happy. And the important thing with these mobile phones, for example, people have trust in them now. Because if you send money, for example, I send money to my mother at the village, she recognizes that this is a very important aspect, and the money cannot be lost. Even if you tell my mother that I'm sending this money by phone, she'll be happy because she knows that she'll get the money right there. So people have built trust in the use of these technology, especially the use of mobile phones. So let us leverage it. Now, and this is what I'm saying, that the future will likely be dominated by development in technology. Now, there is other thing which people have talked about is bank assurance, that it has been installed. The bank regulations are now enforced. People are arguing that, some people are arguing that banks have been doing insurance. But this is a new thing. Very few are doing. The impact were not felt. But if all decide to enter the market, I think the impact will be big and will impact the market as such. Now, of course, one thing which we must admit that, and it has been said by some of the speakers before me, that banks usually command respect, trust on their customers, from their customers. In other words, people tend to believe their bankers more than other players in the financial market, in the financial institutions. So I think with this trust, and by putting bank assurance in force now, you see the banks will make this part and parcel of their products. In other words, part of the parcel of their business. So I think they will put more efforts to ensure that they get more from this particular business, not only on business of loans and whatever. So they will tend to treat this as part and parcel of their business, in which case it will grow. So if it grows, then it means that it will affect the future outlook of the market. In other words, the future shape of the market. Now, there is also other issues, but I will skip. Now, what about the traditional distribution channels, like the brokers now? This is our area, and agents, and so on and so forth. You see, I'm saying, yes, we can do business, but we have to change if we are to get more. Now, statistics have shown, and some of them showed, and I have them here from TIBA, that the reports of TIBA of 2012 to 2016 show that the brokers had more than 55 market share. Contribution in terms of premium income. But this has fallen the year 2017. I don't know 2018 how it will be. It has fallen 48%. Now, out of this, if you look in terms of market share, it is only 61%, 63.3% of the broker business was earned by only 3 brokers. only 3 brokers, which means out of the 115 brokers which are existing, 112 brokers share only 38, the remaining 38%. Now, what is my prediction? My prediction is that if you are not careful, the broker share might still fall lower and lower, and may even lead to exit of some of us. Now, why I'm saying this? There are 3 points which I'm trying to put forward. The one which I've already said, the entry of new players like bank assurance, these technology sort of payments or transactions, the short codes, which some of them are using now, like TIGO, they are doing with Milvik, something like Milvik. So that may expand. Now, okay, they might be doing small type of business, classes of business. But you know, the law of large numbers. You may be doing small business, but in total, it will be huge. So it may outnumber the share of what they are doing, the traditional agents are doing right now. So the entry of bank assurance, the entry of digital sort of transactions, this will likely affect the brokers, and they might lead to some of them, as I'm saying, losing the market share, and for that matter, broker business falling down. Now, the other thing which I see about the broker in the future is that there are certain sort of regulatory requirements which are hugely directed on brokers. You see, so you find that the broker has more costs than the other distribution channels. In other words, to procure a business for a broker, he needs to incur a lot of expenses. He's required to do returns, despite the capital, which is now big and it is increasing each year. You see, some small brokers might not be able to break even. And this may lead to also the exit of some of them, or even deter entry of new ones. So if the costs are not checked, because, for example, costs like, you see now we have cash and carry. Now, there are issues like insurance, fidelity, which were there to safeguard that if the money, the premium is lost by misappropriation by the broker, then this can take care of it. And many other expenses. But at the same time, the commission, which is paid to all intermediaries, is the same. So you see that the cost aspect may also affect future existence of some of brokers. Remember, I said 60% of the broker business is monopolized by 3 brokers. So you can see the rest if we continue with this. Now, also, let me talk about this aspect which was touched in the morning about the government business. Now, I don't recall, maybe you'll assist me, especially the commissioner, that there's any directive from the government which requires that government business be placed with one insurer. Of course, I was a NIC MD. I left there 4 years ago. I used to pray for that the government business be placed with NIC. But you see, that is good. We are not saying that the entire of it be brought to us, at least part of it. Because this is this company, this captive. NIC or ZIC is this government captives. So, and one thing is that a client has the right to choose the insurer. But my point here is, so don't blame NIC for getting this business. My point here is on the part of the brokers. That, you see, why then deny brokers of this business? Because these are the professionals which we talked about early this morning, that they can give advice to a client, especially these government institutions, which are huge. Some of them are huge. You talk of TANESCO and others. These are very big. They need a professional advice. An insurer alone cannot be able to give this, to sustain, to give entirely what is required by a big client like that. So, at least, brokers should be allowed to transact this business. After all, there is no additional cost. When it is transacted through brokers, it's the same cost, because what is there is just a commission which you get, which is given to everybody. So this should be looked upon, if at all we have to save some of the brokers. And we have said it that brokers usually deal with big businesses. Now, some of these businesses are from the government institutions. Maybe to conclude, so that I give the boss more time, in my paper, I've tried to dwell on the developments in technology and entry of new players like bank assurance and the like. And these will likely impact on the market, future shape of the market. So the insurance market must therefore embrace technology and use it, otherwise we'll be left behind and we cannot prosper. I always praise the the communications industry. This has taken very few years to come to a stage where now you can send money right now and a person in the village can receive that money. You can call a person and get the message just straight away at the same time. So let us also try to move this way. Otherwise, we'll be left behind. Thank you very much.
Thank you very much, Justin. If I heard you right, it's just like you were saying, technicians in the regulation, please, not that in the end you're going to be brokers. I don't know whether I heard it right. Thank you very much, Justin, and now invite the Commissioner of Insurance to do a presentation.
From regulatory perspective, we look at the shape of the insurance sector to be somewhere in the future. The idea behind is to make sure that these aspects are highly improved or increased. So we need to work out how we can make sure that these variables are in a sufficient position. So insurance penetration, we need it to be at the highest level. So by providing some targets year after year, then you are able to drive our industry to somewhere else. Insurance density, insurance awareness, to empower local capacity to retain more risks. If possible, all the risks in our market should remain within our country so that all the premiums are reserved for the economic development of the country. If possible, to make few reinsurance abroad. And if at all we have many reinsurance companies in our own, then we can reinsure most of the risks internally. If we do that, we retain more of the premiums and we enhance economic growth. Again, participation of local players The market, if you look at the statistics, how many insurers are 100% owned by local people compared to partial ownership, you find that there are very few companies, especially insurance companies, which are totally locally owned. So how do we increase the ownership so that we have an increased percent? Currently, it's like 10%, but we need to make some efforts so that we have maybe 50% totally owned by our local people. Increase the use of technology in servicing our people, policyholders, underwriting issues, claims management issues, so that we reduce the paperwork, and hence we increase efficiency and effectiveness. We reduce the cost and time taken by participants, especially customers, to make follow-up for claims handling and settlement issues. Again, new product development, especially in untapped markets, very important. The issue of microinsurance and other products which are very important. Market conduct to be very effective and well organized, and market ratios, to have those ratios which are applicable or within the sufficient level. Now, to start with, how we can increase penetration. That's the key idea which will be, or we should be asking ourselves. Whatever we are doing, how can we increase that penetration? It is a ratio given by gross written premium divided by the GDP. We know that if gross written premium is increasing at a higher rate than the increase of GDP, is where penetration can increase. Gross premium is increasing, GDP is increasing, but GDP is increasing at a faster rate than gross written premium. So when you work out the numbers, year after year, you find that it's like nothing is happening in the market. But actually we are doing something. The problem is our pace of increase is lower than the pace of other sectors. Now, there could be many ways which can be used to increase. Offering new insurance products in the market is where now we need to embark on developing those new products, especially targeting customers, those low-income individuals. Then we assess their needs, and we design products which are appealing to the market, appealing to those customers. Like other colleagues have said, you don't just sit in the boardroom and design a product and dish out there, assuming that customers will buy. You need to go there, make some assessment, financial needs assessment, look at their behavior of buying, purchasing, how they can be satisfied, learn all those issues so that when you design a product, the customer says, oh, this is what I've been waiting. If you do that, then you are able to increase penetration by doing something on the gross written premium. Increasing the range of compulsory insurance covers. This could be an idea when it comes to regulatory perspective. To put some regulations, some laws for some of the insurance products, which we see that they are most important to many or to the majority of the people. So if we add the compulsory aspect, like the way it is for motor, then we are likely to push the penetration. So if that happens, of course, it is in the process. The regulator in the process already has started proposing for some kind of compulsory covers. It has outlined some of the covers which they think, if they are made compulsory, they can help to increase the penetration. Entering into new markets which were not tapped, the issue of microinsurance. Expanding the intermediary base to reach and attract many of the remote located prospects. And again, it is the issue of microinsurance, the issue of various alternative ways to reach various people. Connected to penetration, we have also insurance density. Then the factors which can push are the same as those which can push for penetration. Then we have the issue of awareness. Of course, someone to purchase a product, he has to know the importance, the use of various insurance products. We need to measure awareness. If more people are approached, are aware of the insurance products, obviously they are likely to purchase such products. Now, market participants, insurance companies, insurance brokers, insurance agents, and others, including the authority, TIBA, need to cooperate in order to make sure that they use various ways to disseminate information, to communicate to the majority of people in order to increase penetration. By increasing penetration, by increasing awareness, indirectly can increase penetration. Now, these are some of the ways which can be used, and TIBA has already proposed some of these ways in order to make sure that penetration is increased. To have education from primary level, secondary level, college level, university level. To arrange some sensitization programs or events. This should be planned collectively, market players, to reach village level, ward level, district level, and the regional level. Time to time. So you arrange maybe this month, you are going to do an event at a specific area so that you attain the awareness level. Plan the advertisement activities so that participants or market players, insurance brokers, insurance companies, and the like, to arrange some events, TV, radio, newspapers, internet, regular basis, maybe weekly or monthly, so that this kind of knowledge penetrates to the majority of the people. So if you use various ways, then you are likely to increase the awareness. And you increase the awareness, indirectly, you affect another variable which is responsible for the market performance. You increase the penetration. People get to know and can buy products once they have learned. Again, we can use mobile phones. You send or you make some program for these companies. At least you send some messages to their phones. The majority of the people, whether they are living in rural areas or remote areas, at least they have a phone. May not be iPhone, may not be smartphone, but they have. So a message can send, or a message can be sent and can reach the majority when we use this alternative. Again, we're likely to have special training for leaders. Some cases, those people who are making decisions, especially government officials, some of them are likely not to be aware of the importance of this. And when it comes to decision making, changing some laws which seems to be unreasonable or affecting the brokers and insurance, they become rigid because they are not aware, they don't understand such kind of insurance knowledge. So once these people are trained, get to know, probably in the course of making decisions about laws and regulations, they can do something which is better for the market. Then the issue of technology, the majority of participants have explained a lot. Technology is inevitable in insurance business. When it comes to underwriting, various models are in place, software, all these are technologies. And again, to help or to service the policyholders, we can use various systems to make sure that the information are being collected, are being recorded, are being analyzed using very effective current technology. The authority have in place these systems to help collect information, analyze, and make some decisions for the underwriting part. And again, the authority is in the process. And of course, companies or insurance companies, insurance brokers should also cooperate with other participants, especially when it comes to claims handling. If we have a system which tracks the claims, then it will help to reduce the cost for the customer to make follow-up every time to visit the company to ask for the claims payment or whatever. If we have a system in place, the customer can just log in, provide the information online, then he keeps on tracking where the claim process has reached. By so doing, we can improve our operations. At the same time, we can provide that trust to the customer. If you have effective ways of doing business, underwriting, and claims handling. Another thing which the market is facing, professionalism. We are doing business. The core business is insurance, but there are supporting disciplines which needed to be also used in connection to the core business. In order for the market to reach a certain stage which is better, knowledge is inevitable. Professionalism, that means those people who are involved in the market, they should have at least a minimum level of insurance knowledge, either academic or professional qualification. That is the fact. You can't say that you have experience or you can just learn without undergoing a unique, accredited way and say that you can do better in the market. So it's very important, especially when it comes to key positions in insurance companies, brokers, agents. Professionalism is inevitable. Risk is dynamic. So having theory or a backup of academic qualification or professional qualification can make you to make some better decision when risks are changing. Then using your theory or whatever, you can adjust according to the market, according to the environment. So it's very important, and the authority is trying to work out to make sure that the majority of individuals in the sector, and that's how worldwide is carried out. Certain positions especially, they provide a prerequisite that to be there, you need to have a particular minimum level of qualification and no way out. So I would advise, if at all it has happened that you have occupied a certain position in insurance company, insurance broker, especially managers and directors, and you don't have such kind of academic insurance knowledge, academic professional knowledge, you better go back to school, at least to have a minimum qualification. And in our country, we have the Institute of Finance Management. It is offering these courses from COP to master's level. And again, there are other international bodies which are offering such professional qualifications, CII, India, and whatever. Just go anywhere, just acquire such knowledge. It will help you to make our market to excel. We'll be discussing all these, but when it comes to professionalism, there is no way you can design microinsurance if you don't have insurance knowledge. You have data, and those data should be found within that local market. It's you who knows better your market, rather than the consultants who is based in the UK or somewhere. So that's very important. That's why we need to have these academic and professional qualification ourselves. We know our market, we know our environment, then we can do better if we acquire this knowledge and use it. Otherwise, we'll be just making time. Knowledge is very important in any sector, Look at the banks. Look at lawyers. They have a unique recognition because they have such professional qualification. Look at doctors. They have been accredited. So they stand out because they have something, and that's why they have to excel, or they excel because of insurance knowledge. So I was trying to explain that our institute is in the process of being accredited by CII. Just few stages have left, so that students now start having exemptions. And again, IFM, especially when it comes to COP, is in the process of designing online training. So where you don't need to go physically, you can just take a course wherever you are. Then you get knowledge in insurance, which will help you to design a microinsurance product and other new products, so that we make innovations. We don't continue to sell the same products. 10 years ago, we continue with the same. If you have these experts, well equipped with the knowledge, they can design something which reflects the ability to pay of someone, the needs of someone, rather than just being in a board, designing something which, if you take out there, it fails. Design something which is needed by someone. And that is not possible if we don't have this kind of knowledge. Again, you have IIT is in the process of designing these professional qualifications. We have EAC also in the process of designing all these professional qualifications, so that our people can get this knowledge and can use it for the betterment of the sector. From regulatory authority, our perspective, we are trying to come up with something at least to push people to attain these qualifications. With the time, probably can be given 3 years or 5 years, especially when you are in a particular position. You are manager, you are director, and you don't have any insurance knowledge for the case of academic, for the case of profession. You are given 5 years or 3 years. When the time elapses, you have not yet acquired, you better leave that position. Again, when it comes to product development, you see, they are interrelated. The variables are interrelated. You cannot develop something if you don't have knowledge in that product. And that knowledge, it means academic and professional qualifications. The authority is trying to come up with something which can make some of the insurance products to be compulsory. For instance, maybe public liability directors and officers, professional indemnity, and other products which the participants will see it is convenient. By so doing, it can help to increase the penetration, it can help to increase the awareness. Again, in the market, we have problems of flaunting, and this could be because of lack of capital, capability. Then companies just take the risk and flaunt or give to someone, especially foreign countries, rather than retaining. So we need to do something to avoid this kind of behavior, flaunting, and I think the law also forbids this kind of behavior. So we are interested to create or to increase capacity in our market by doing a lot of things, maybe borrowing or finding something, a fund where we have injection so that we increase capital. Maybe increasing the capital requirement, maybe doubling or something, or some kind of consolidation, mergers and acquisition. Rather than having many companies with little capital, better have maybe 5 or 6 huge companies with large capital, so that the ability to acquire or to retain more risk is attained. Again, the market is facing challenges when it comes to complaints. And from the regulatory perspective, we are interested to make sure that the customers are satisfied with the claims handling. So the way insurance companies handle should be in a satisfactory level. And again, this could be attributed again with lack of knowledge. You see, when you compare banks and insurance companies, when it comes to handling customer care, banks are highly trusted because of the way they handle claims. Even if the claim is not payable, the customer gets satisfied of the explanation which is given from the officer. But for ours, say, we cannot pay, go wherever you want. So that is not a good language for the customer. You make this customer to hate you and the market, and they feel like you are doing some kind of gambling. So reputation in the whole market is eroded because of the way we treat these people. So we need some knowledge, understanding, not only in insurance, but in other soft skills, how to handle customers, customer care skills and whatever. Some companies can repudiate or just reject to pay a claim which is sometimes genuine. Maybe taking the weakness of the customer. They are not aware of some of the issues, proximate case and whatever. So some companies are just refusing to pay the claim which is genuine. From regulatory perspective, we are interested to make sure that we minimize the complaints so that all these aspects are highly handled with care. Again, you have the issue of capital, which many companies are likely to claim that they make some reinsurance, especially abroad. They retain little risk because they are lacking capital. But we need to find a way of increasing this capital. And we need to find a way of making sure that we retain more of the risk for the company, for the development of the country, especially for those big projects, massive. It's not just the project is having a lot of money, value, then you think of it is of high risk. We are looking at the probability of loss happening to that project. The project is likely to have high value, but when it comes to the probability of loss happening, you find that it is small. And sometimes when it comes to the sum insured, you don't need to take the whole value. Just take the value at risk. By so doing, you'll be retaining more of the risk and retaining more of the premiums. So we need to find a way of making sure that we have capital, how to increase capital, either by borrowing or by whatever, make sure that we need to raise the capital. So various ways can be proposed in order to enhance the ability to retain risks. So in the market, we have issues of undercutting. But if you ask these people who are doing this kind of malpractice, they are likely to give you some reasons. Probably it's because of the regulations. Maybe the set rates are high. That's why they are doing this. The authority is in the process of revising the minimum rates to see how it can reduce the undercutting and make the environment to practice favorable to all participants. So we have communication problems, as I said, customer care to some of the providers of the services. Again, we had a problem with non-remittance and a delay to remit premium to insurer, but currently because we have adopted another system, so that one is phased out. So we'll be having some systems if we see that something is not going right. So we try to come up with a new innovation so that we increase efficiency in insurance operations. Again, we have poor underwriting practice. Again, this can be attributed by lack of knowledge. That's why we have such kind of a situation. Unfair claim processing. Again, you have incentives insurers give to brokers, because brokers are operating independently. They are placing risk with whatever insurance company they find it is better for their customers. So there is a tendency of insurance companies to give some incentives so that brokers could be giving them some business. So these incentives increases the acquisition cost. At the end of the day, when it comes to ratios, combined ratios, find that they are higher unnecessarily. So it's not a better practice of providing some incentives because it has an impact to the market. Distribution channels, other presenters have explained it well. We are using various distribution channels in order to provide some competition, in order to make sure that many people are accessed by using different ways. Otherwise, if we rely on the conventional channels, the majority of people may not be accessed, and therefore penetration can be a problem. So we are having more of these distribution channels. One of the reasons is to increase penetration, to make the product accessible to the majority of people. There are some places where these conventional channels may not reach because of the cost implication. So once we use alternative channels, at least they are cheaper, then we can afford to reach the majority. So that is my brief presentation. I thank you all for your listening.
Thank you, Mr. Commissioner. Thank you, Justin. I don't know whether there is any daring player to ask the commissioner any question on his directives. Okay, I allow only, okay, 3 is a better one.
Yeah, thank you very much. I cannot dare ask the commissioner a question, but I'll make a comment. Yeah, Mr. Commissioner, thank you so much for this insightful presentation. I have one request though, and I'm making this request in good faith. And it is good for the industry and also for the country. I was imagining the Beira cyclone damage that was caused by the cyclone this year in Beira, where the entire Beira city woke up one morning and found itself soaked in water, and they are saying to repair that city or bring it back to the state where it was, you need at least $7 billion. And I was thinking aloud, supposing all those houses were insured and all the premium was in Mozambique, who will pay those claims? Now, Beira and Dar es Salaam were about 600 kilometers apart. It was by sheer God's protection that that cyclone did not come to Dar es Salaam. If this Dar es Salaam would have, suffered the damage that Beira suffered, and we are the ones who are advising the government, and we are telling the government, we are saying, sit, get assured the premiums will be kept in Tanzania. Who will pay the claims? So I think much as I respect what we are trying to do, that the premiums remain in the country, we invest the money in the country, we build the country using the same money, reinsurance is still very important. We cannot keep all the risks here. We have to transfer the risks, because that is the best risk management actually. technique. You can retain the risk, you can reduce the risk, you can avoid the risk, but you have to transfer the risk at some point in time. So much as we are talking about making insurance give a contribution to the economy, that is, reasonable. We should also don't forget the fact that we cannot retain all the risks in this country. That is my point. Thank you.
Okay, thank you very much. My name is Melchizedek Nyao from Resolution Insurance. I have one question, especially for the skills and professional requirements for the insurance players. But mainly I will go to the agents, especially when we are talking about the inclusive insurance market. We've talked about the banks, that they are well penetrated using the bank agents everywhere in the countries. But I'm not sure if those agents have the bank COP. So what bank did is they have simplified their process, their products, their systems, and they've made sure that those agents, the mangi shops, they can actually sell their products. So going to our market in insurance, and especially because the future of insurance is in the microinsurance, because the high ends have already been tapped. So looking at that angle, on microinsurance, we said we need a very simple product, a product that can be understood by illiterate persons. And then we need a system, a technology, a very simple technology. So is there a possibility for a regulator to consider that to have the agents, especially for the brokers actually, because brokers need to recruit agents, so that many agents, so that they can sell microinsurance. So what broker does is just they go to mango shops, you train them, you give them the platform, they sell the insurance. Is it also possible for those insurance agents to do other activities? So you go to the shop, you have a bank agent, they can do insurance, they can also do the other activities, and also we reduce other unnecessary costs. So I think is my question. Is it possible we look at that angle and then we simplify the processes?
Okay, Anselmi, quick one.
Thank you. Mine are only two. One is with the introduction of the direct premium, the position of broker has been weakened. Now we are seeing even insurers now taking away the business that was previously owned by the brokers, and brokers cannot do anything about it. Now, Mr. Commissioner, do you think, so as to maintain the role of the broker, can we think of going to a full intermediary market, please? Because that is the only way we can protect the inclusive, if we are thinking of inclusive insurance. Because like in the legal space, if a person has to have an advocate when he has to go to the court, so that the advocate protect the interest of that person. Should we now go to a full intermediary market? And also with regard to financial capacity of especially of our insurers, is it not now the time that, because we have had that vicious cycle of no capacity, front, no capacity, is it not now the time for the insurers to have a financial capacity development plan? And we can help them to structure this. And also, is it not now the time to use other tools such as insurance-linked securities, for example, to build the capacity and to break the vicious cycle of undercapacity?
Last question.
My name is Komanga. Mr. Commissioner, thank you for a good presentation. My concern is your office to review the minimum premium rates. I think issue here is not to review the minimum rates. We have had these minimum rates for a year now, and people have been misbehaving, the underwriters. I don't blame the brokers, because it is us, the underwriters, who allow them to go and undercut. I disagree with the market to allow the ATI to be the monitor of the people who are misbehaving. I think this is a law. It was signed. It's gone through all the process of being a law in this country. It has gone to the parliament as well. If someone does misconduct, let them be penalized. I think what you need to do, what your office need to do, is to send your team to inspect, to do auditing, thorough auditing, and they should be very, very technically fit to understand and to note where are these underwriters been misbehaving. Otherwise, we can revise the minimum rates again, but as long as it stays with the ATI, nothing will be done. These are the rules, and you are the regulator, action must be taken. Mr. Mwandu, for your information, Rais alikuwa Rufiji leo, ameweka wazi, Stiglitz Gorge iende National Insurance. Amemwagiza waziri wa fedha. Asante.
Thank you very much, and thank you all that nobody asked a question. It was only recommendations, proposals. Mr. Commissioner, it's now your turn to round up.
There are some. We have a microinsurance regulation, and we have bank assurance regulations. Now, for someone to be an agent, whether the brokers can use the shops, can use the supermarkets, kind of brand assurance. It is ideally that someone who is involved in insurance business at any level to have a minimum level of qualification, whether he's a shopkeeper or a seller in the supermarket or whoever, at least should have a COP. And that is the regulation. That means you cannot operate insurance business without approval. So there is no way a broker can assign the shopkeeper or can assign a supermarket or can use someone to do insurance business if that person is not approved. That's what I understand. Unless otherwise, we can go back and try to see whether it is possible or not. But again, the idea behind is to make sure that someone who is dealing with the customers should have a sufficient level of knowledge, because the nature of insurance business is different from other businesses. It is intangible goods. So you cannot allow anyone to transact. That's why we have a regulation which requires a minimum, and that is the minimum. COP is the minimum qualification. So that should be maintained. And I don't think if there is some issues to argue that maybe just let's relax the regulation to allow anyone to be involved. Because of the nature of the business itself, it's very different from tangible goods. So that one I can explain that way. And there is an issue of fully intermediary market. That one probably, it might need some more argument by looking at various perspectives and impacts from various angles. So I cannot say yes or no or something like that, because it needs some participation level in making decisions. And some decisions need to be made by higher authorities, whom we have seen that they are lacking insurance knowledge. Probably we need to train them first before they can do such kind of business or such kind of decision. We might be in a better position of seeing the impact, the positive impacts or effects of this full intermediary aspect. But those people who are making decisions, they don't have such perception. We need to train them so that when you are speaking to them, we are in the same mind. Otherwise, we are likely to face some challenges. Yeah, for the case of financial capacity, that also, it needs some more dialogue between participants. I don't have answers for such, but it needs cooperative bargaining power and the discussions to reach the consensus.
Thank you, Commissioner. It's not good to say after the boss has said, but anyway, let me just compliment what some of the issues which the Commissioner has said. I wish to comment something on my previous boss, again, Mr. Kamzora, on issue of reinsurance. But yes, what you have said, Kamzora, is quite right. You cannot survive without reinsurance, adequate reinsurance. But I think there is a weakness in the market which might which affect this aspect, and you find that most of the money goes outside, and this is what the government is cautious about it. So I think if we insurers work together in partnership, I think that is the way we can reduce the outflow or flight of premium outside. For example, there are these big risks. If they can be shared among the insurers, then that's somehow we can reduce the flight. But I understand the market is not like that. Some of the insurers are very greedy, maybe because I'm sorry to use that word, maybe because they want to maximize our insurance commission. You see, when they get risks, they only share with maybe friends insurers, but the rest are kept out. Now, this is not fair. Capital flight will be there if we don't share the business within and at least reduce the flight. Anyway, and the last one is on Mr. Kamanga. Are you Komanga? Sorry. Kamanga is with NIC. Yes, I think if you listened, I went very quickly when I was presenting. If you listened, I said, it is not, I mean, the government has the right to use the insurer of its own. And that is allowed. Even your client can choose. You can go to a client and the client can tell you, I want my insurance to go to a particular insurer. You cannot refuse him. Just explain, but if you don't understand, then you go to the insurer of his choice. What I'm saying is that why should this business be also allowed to be transacted by brokers? Because these are the people who can give an advice to the clients of the government clients. You see, without the brokers, I'm not saying NIC has a little capacity to do that, but how many NIC workers are there who can explain that? You see, they need the complement of the brokers. And remind you, the broker, like somebody said, is an agent of the client. So he needs maximum advice from him so that he gets the best of insurance he needs. So I'm not denying, the president is right. Don't worry. So what we are demanding, maybe the commissioner is here, is that, like somebody said, at least the brokers should also be allowed to participate in this business. And I said, after all, the cost, I mean, there is no extra cost of using a broker or an agent for that matter. So that is what I wanted to emphasize. Thank you.
Mr. Mwando, just a point to add to your point is brokers want to pay taxes. So if this money doesn't pass through the brokers, it means we lose that chance to pay TRA. I hope someone from TRA is here. Because if I had a risk, 100 shillings, corporate tax, say, assume the whole amount goes to the net, is 30 shillings. So TRA gets that 30 shillings as corporate tax. Part of that money goes to salaries and other expenses, VAT and so on. By cutting out the broker, that part for TRA to tap is lost. So the money goes straight from the customer, cuts out the broker, NIC, and then NIC uses reinsurance brokers who then gain and possibly, and I'm sorry, would I? So at the end of the day, the reinsurance broker almost inevitably will be a foreign broker who will then have their cut by the structure of insurance and will be paying their taxes there. The local broker doesn't cut. Two, we are talking about local content. All the brokers now by law must be 67% owned locally. If you cut them out, you have reduced the opportunity for local content participation. So I think rather than look at it like the broker wants to be involved, possibly for commission, let's look also, is the broker creating an opportunity for TRA to tap into taxes and therefore contribute to the government coffer? It's just a point to add to yes. Thank you.
This was just a remark in my context, and I think I need to proceed. Mr. Commissioner, with your permission, the distinguished guests, I have to call upon the president of TIBA to come and present some awards to you, and the presenter, your co-presenter, Mr. Justin Mwandu. Okay, now Mr. Mwandu.